Everybody tries to overcomplicate the real estate business, but at the end of the day, there's really only 3 strategies that you need to worry about when you're looking to invest in real estate. And I'm gonna unpack all 3 of those strategies for you guys in this video. And if you stick around to the end, I'm gonna tell you about my favorite strategy, which helped me scale from basically 5 to 200 properties over a 4-year period of time in multiple cities. So if we haven't met before and you're new here, my name's Andrew Glisson, and I was buying real estate as a hobby on the side, working full time. And I'm here to tell you guys that you can do that too. So whether you're buying your first rental property or you want to scale your existing rental property portfolio, we're going to give you the tools and tips on preparing your organization for that growth. And the first place we're going to do that is to talk about the 3 main strategies in real estate, which are buy, sell, and keep. Some of you guys are doing all 3. Some of you are doing 1, some of you are doing 2, a combination of those. I'm doing all 3, maybe you are. And I want to talk about each of them because some people, when I talk to clients or people that I've done business with, they only want to do 1 of 3. They don't want to keep anything. All they want to do is the buy strategy. Some people, all they want to do is the sell strategy. All I want to do is fix and flip and sell things. Regardless of what you're doing right now, there's a lot of things that you could be doing that's similar to another strategy. If you look at the buy strategy, a lot of the connotation of the buy strategy is wholesalers. There's a purchase and sale agreement. There's a wholesale contract. There's a CRM software. The buy strategy is largely that acquisition-based strategy where you're going direct to seller, trying to approach sellers to buy their deal. Whatever you do with that afterwards is up to you. It's a different strategy. But the buy strategy is a strategy in and of itself. You're going to direct to sellers. It's a really important strategy in the wholesale business. There's a lot of people that just start and they stay in this strategy and they make a lot of money. There's nothing wrong with it. But what I want to help you start to think about is that buy strategy, that sell strategy, and that keep strategy, there's a lot of similarities. So we're going to go around this Venn diagram that I've created, and we're going to talk about different elements of each of these strategies so you can see how there's so many similarities in the different strategies in real estate. And it's going to help you, if you start to think this way, you can do all 3 of them. The sell strategy is strategy number 2, and it's largely geared to fix and flip. However you bought that property, whether it came through a wholesaler in the buy strategy, you went to the MLS and found a house, you went to your next door neighbor and bought their house. The sell strategy is either a wholesale sell to somebody else, you're fixing that property and you're flipping it, or you are somehow letting that property go. Whether you're doing some work to it or you're not, or you're just taking a wholesale fee, that property is gone. The thing that you need to understand about these two strategies, buy and sell, is that these are treadmill strategies. You can never get off the treadmill. The second you stop acquiring properties, the second you stop selling properties, you make no money. There's no long-term future. There's no annuity stream that you're creating, which is really the draw in real estate. It's that annuity stream that you're creating, that keep strategy that we're going to talk about in a minute. So I want you to think about, if you're only focused on the buy strategy or the sell strategy, that's a treadmill that you have to stay on for forever. The second you stop making money. They're great strategies. You can make a lot of money doing it. Some of you guys are making millions of dollars a year doing these 2 strategies, but I want you to consider the 3rd strategy, which is the keep, and that's what we're going to talk about now. The keep strategy is the 3rd strategy in real estate, and it's the long-term hold. You can rent these properties long-term, or you can rent these properties on a short-term basis, like an Airbnb. But there's a lot of things that go into this strategy that you got to think about. There's equipment and there's warranties. There are capital expenses that you have to pay for. There's insurance, there's property taxes. There is property management, that's a fee. You're either doing it yourself or you're hiring it out. There's a lot of expenses that you have to think about that are long-term in nature that go along with this strategy. And it's not a very simple buy and sell strategy. You get in, you get out, you take a big quick pile of money. There's loans that you have to get a lot of times from banks that are either commercial loans that mature in 5 years, or there's loans that mature in 30 years. There's more sophisticated banking relationships that you have to develop. If you're in the sales strategy, you can use hard money lenders and you can exit that investment very quickly with a hard money lender that does no due diligence on you personally. They're just they use the house as collateral and they move on. If you're doing long-term holds, the bank's looking at you. They're buying you. It's one of the best ways to accumulate that long-term success in that long-term income stream that renews every year. But you have to have people that buy into you in that process. There's banks, there's tenants. It's a more difficult strategy, but one that you can be successful at. It just takes some planning, which I'm going to help you with. The point of a Venn diagram is to show you that there's similarities in these 3 circles. There's a lot of things that you do in every single one of these strategies that are going to be similar: accounting, a website, task management, operations. There's so many items that touch each one of these strategies. If you're doing one, why would you not consider doing the other two? You're already doing a lot of these things anyway. So I want you to start gearing your mind up to think about, if you're stuck in one strategy right now, it's not very hard to pivot to the other ones. You just have an open mind to prepare yourself to pivot to other strategies, to include those. We're going to have to do this in the environment that we're in. It's very challenging to borrow money. It's very challenging to go direct to seller. There's a ton of people wholesaling. There's a lot of people that are approaching sellers to buy their houses, so it's harder to get deals. So we need to approach the business to be able to make more money in different ways than just the one strategy that we've been stuck in. And I want to tell you, it's not as hard as you think. And that's how we're going to start. The next thing that I want to show you is the capital complexity and value chart. Whatever you're doing in real estate on these three strategies, it takes a certain level of capital. It develops in terms of complexity, and there's a certain amount of value that you get from doing these three things. If you look at the buy strategy, in my opinion, in my experience, doing hundreds of deals, it's the lowest on the value ladder. You're going to put a lot of time and effort into buying these houses. It's a wholesale type strategy. So you're selling that opportunity to buy that property to somebody else. It's a very quick bit of money. The average wholesale fee in the country last year was $10,000, and then you have to give half of that to the government. That's a very low value, very easy way to get into the business, but it's not a very valuable strategy in terms of the capital complexity and value ladder that I've built here. The second strategy, fix and flip, is a little bit more complex. It requires money. You have to have capital to fix and flip these houses, but it can provide more income for you, but you still have to give. If you don't own that property for longer than a year, it's short-term capital gains that are taxed at ordinary income. So you give half of that fee back to the government. So think about that. You've done this fix and flip. You're projecting your profit at $50,000, and then you have to give half of that back to the government. That's a very hard way to make money. And you have to keep doing that to keep generating that $50,000. You have to keep doing fix and flips over and over and over again. It's a very difficult way to add value to you and yourself personally and your net worth. Within that fix and flip strategy, you can see that I've kind of tiered certain years of renovations. There's the newer renovations on the left, which give you a little bit more value because they're less risky. A lot of times you know more when you walk into a newer house. You really kind of know what's wrong with it. If you walk into a 2000 built house, you can kind of tell what you need to do in order to get your fix and flip revenue at the end of that project. If you walk into a 1940s house, you could uncover a massive amount of rotten wood that's going to really impact your earnings on that house. It's a little bit more complex, and it takes a little bit more money to get that value out of that. I think older home renovations, if you're fixing and flipping them, are a lot harder than newer home renovations. And then kind of bracketing that buy and sell strategy, you see that green line at the bottom, which says there's an immediate income tax consequence to that. If you're buying and wholesaling, or you're buying and fixing and flipping, and you sell that and you own that asset for less than a year, again, that is short-term capital gains. You have to give ordinary income back to the government, minus your expenses, of course, and there's an immediate tax consequence to that. If you think about the keep strategy, that is a strategy where you can defer the income tax consequence till you die and you pass that asset along to your heirs, or you sell it, but you can roll that tax implication into a 1031 exchange in your next asset. The keep strategy is the best strategy in real estate. It takes the most capital. It's the most complex because you have to deal with banks that are long-term lenders, not short-term hard money lenders. You have to keep this asset for long-term. So liquidity management is really important. It's the most valuable aspect of the real estate business. It's where I want you to be. It's where I am. I'm going to teach you how to do that, and we're going to get there. The last thing I want to talk about in the keep strategy is the BRRRR method, which I used to call cash out refinance, but somebody made a bunch of money on coining this phrase, this acronym, which basically means buy, renovate, rent, refinance, and repeat. It's a mouthful. But there's 3 levels of that strategy, which can incrementally add a lot more value if you do them right. There is the facelift, the demo and replace, and the heavy lift. The heavy lift is on the very top right corner of the value, capital, and complexity chart. It requires the most capital. It's the most complex, but it adds the most value to your net worth. If you can find the doggest property that's out there, and you can invest a significant amount of money in that and reposition that asset, that is the way that I personally have increased my net worth tenfold in the last 3 years. I found the worst projects and I've invested significant dollars repositioning those assets. It is a very challenging way to do business. You can get taken advantage of massively by everybody along the way. I'm going to teach you how to do it in a way where you don't get taken advantage of like I did, but don't be afraid to find those very challenging, those very difficult renovation projects and consider them in your strategy. It's the best way to add value to your net worth. There's easier ways to do it that are still valuable, but these are long-term holds. You don't want to do this work and then sell it to somebody else. You get a little cash hit, but you got to do it again next year to make that money. You want to do the work, add the value, cash out, refinance that money, put it in your pocket and go do another deal, but you have an income producing asset. I'm going to teach you how to get to the keep method and stay there and keep doing that over time so you can be successful in real estate and keep making that money as an annuity year over year. Whatever you're doing on the 3 strategies in real estate, you can be successful in every single one of them. You can make a lot of money. And I'm here to help you structure your business in such a way that you can maximize value for yourself, pay as little amount of taxes as you can, and build a company that's going to sustain you and your family in the long term that you can be proud of and that can support you. Thanks for watching, everybody. If you found that video helpful, I hope you'll like and share it. Don't forget to subscribe to our content to get updates on future videos. And if you're interested in taking a deeper dive into real estate investing, then I hope you'll look up our mentorship program at thevictorystrategy.com.